Welcome to the E3 Live Market Report. I'm Pat McClatchy. We will be starting with our export figures as they come out in about 2 minutes. We welcome everybody here today. We're looking at markets that, as we speak, are all up. We'll see the reaction of those markets in just a minute. We'll make a note of this. Cotton market is up about 50 points right now. We've got the wheat market up 6 cents. Corn market is up 1/2 cent, and the soybean market is up 3.5. So we can see the reaction of the market as these numbers come out. We had poor numbers last week in cotton. We had a cancellation number. That reflects higher prices in cotton, and our export demand just had slowed up considerably because of that. So we'll see what the numbers show today. Outside markets right now, the dollar, which it's been on an upward tear in the market, is actually down about 71 points today. And as that happens, we're looking at crude oil up about 50 cents a barrel, gold up $5 an ounce, silver up 18 cents. The S&P is up a good bit today, and that's allowing the grains to be up and also the cotton. So we'll look at the reaction of these markets as we move forward here. And we're going to make a few other comments today. After we go through the exports, we're going to talk about seasonals, and we're going to talk about the dollar and the significance of the dollar. So let's see these numbers as they are about to come out. We also have some retail sales numbers coming out. That's what's slowing our numbers up from showing on the screen. Let's see. Just a moment. We're looking right now for these numbers. I've got, just bear with us here for just a minute as we see and as we wait for the numbers to come out. We still don't have them yet. I'm looking at the market. We're not seeing any reaction. Cotton's still up about 40. Right now the cotton market's back down a little bit. It's up 43. Soybeans are up 2. We've got corn up 1/4. We've got wheat up actually 6 right now. Looking further, what we'll do as we wait on this to show up, here we go. Now we're starting to see some numbers come out. The numbers showing up right now for corn, that's the first thing up, is 418,000 metric tons of corn. That's lighter than we've seen, so that should have a negative effect on the market. And as we look at corn's down about 1/2 cent right now. Looking for other numbers to come out. My apologies, sometimes the USDA is slower in their release of the numbers as they are today. Soybeans are just coming out right now, and the soybeans are showing a number of 167,900, also a very low number for that. And soybeans that were up 3.5 right now are approaching up 1. So the market's reacting to that in a negative way. We've got the cotton number coming out. The net number is 36,800. That's a light number for cotton. It's better than last week's number, but still, it is a light number. Reaction in the cotton. No reaction yet in the cotton market, so we're waiting for that. Looking at wheat that's coming out right now. The wheat number was 445,200 metric tons. It's not bad for wheat. That's close to last week's number. Still looking at a breakdown to come out. We'll try one more time and then we'll go on and talk about some other things until that comes out. The reaction of the market so far, cotton market is now up 35. It was up 50 just before the number came out. Soybeans are unchanged. The corn numbers down, corn price is down 1, and wheat's up 6. So it's reacting as you would expect. We are selling off some in the cotton and the soybeans and in the corn. The wheat market's holding in there at their current price levels. We are having a delay with the breakdown on the numbers. So let's just go forward and talk a little bit about other things. You know, as I looked at these, as I make a note on what the market's done over the past week, I had thought that all the grains were down over the past week, when in fact they were all up. They weren't up a lot, but they were up some. I think the market's just been sluggish. It's been up one day, it's been down the next, and as we look at this and we look at the breakdown, we see that over the last week, the wheat market is up, been up about 26 cents. The corn market over the last week has been up about 9 cents. The soybean market over the last week has been up about 14 cents. And the cotton market over the last week has been down 300 points. We're looking at similar information on all these markets, and that is that this is the time of the year that seasonals usually start firming the market up into the April-May time period. We're at a time of the year when that's normally happens. And let's talk about seasonals for just a minute before we get into other things, because we talk about that on this site a good bit. What a seasonal is that certain commodity markets have a natural tendency to move up or down certain times of the year. At harvest time, you're usually at your lowest level for the year, and at planting time, you're usually at your highest level for the year. So as we're sitting right now, the 12th of March, this is the time when we start trending up normally, and that affects wheat, that affects soybeans, that affects corn, it also affects cotton. Now we do have the fundamentals we have to deal with in the market, and the dollar, and we're going to talk about the dollar in just a minute. But the natural seasonal tendency right now is to be moving up. Now let's talk about the dollar. The dollar is a market that increasingly has become important over recent years. When I come in, or when I look at the markets early in the morning, I look to see what cotton's done, I look to see what the grains have done, and the next thing I look at is to look and see what the dollar's done, because the dollar is so important to probably all commodities. And people ask the question, well, why is that? Why is the dollar that important to the market? Well, think about this. As our dollar is really strong and other currencies, our trading partners' currencies are very weak, then their currency allows them to buy less for their money. So that's one of the reasons the dollar is so important, is because as their currencies weaken, they can get less for their money, therefore they're able to buy less. And another thing is, those individual economies of these countries that are trading partners, as their currencies do poorly, many times it reflects an economy that's slowing down. And that also affects demand within their country for certain things. So those are two of the factors that affect the dollar, and why that is important to the markets. And as we talked about seasonals just a moment ago, to go over the seasonals, seasonal tendency is for here toward the first to the mid part of March to see the markets rally in corn and in soybeans and in cotton toward April and the first part of May. But here's something interesting that most people don't realize, and that is that there is a seasonal for the dollar. It's really surprising to hear that, but the information that we use is more research, and more research puts out seasonal tendencies on all commodity markets. And I looked just before we turned on the camera this morning at the seasonal tendency for the dollar. And the seasonal tendency for the dollar, based on this note I just made on this, is from mid-March to right at the end of April to the beginning of May, the tendency is for the dollar to sell off. Now, it doesn't say how low it'll go. It doesn't say anything. It's just there is a seasonal tendency in currencies, specifically the dollar index, somewhere toward the mid part, toward the first half of March, to find a high and then start to retreat. So that's something that we want to be mindful of, because the dollar is critical to so many things. The dollar is right now down 98. As we're sitting here talking, this dollar has sold off quite a bit more. We look over and we see crude oil rallying. We see gold and silver actually taking off and rallying. So that will be supportive, I think, to these commodity prices. Matter of fact, based on where we were this morning before these exports came out, that was probably the lead news that caused these markets to be up. So we want to be mindful of that, why seasonals matter, and why the dollar is so important to these markets, and why we look at them every day. Let's just look at these different markets. At wheat, we'll start with wheat. Talk about some of the factors that have been affecting us lately. It's the same thing for everything. A stronger dollar. Stronger dollar has been a difficult factor for the market. The target for wheat for analysts are talking about May wheat getting as high as 540. They're still talking about that, and May wheat right now is at 506. July wheat, analysts are talking about July wheat getting as high as 530 to 540, and right now July wheat is at 507. The looking at corn, same factors affecting corn as right now the dollar, and the USDA number I didn't mention in wheat was actually supportive a few days ago. USDA number for corn was a little supportive also. The targets for corn, old crop corn, analysts looking at 410 to 420 right now. New crop corn, May corn is at 390. That's the December corn looking for a target of 440, and right now December corn is at 414. The looking at soybeans, same factors affecting that. We will add this to the discussion about these grains. Technically, these markets have gotten under some levels that they need to get back above. I'm talking about moving averages. The moving averages have a lot to do with the momentum of the market because of the strength of the dollar. These markets in soybeans and corn and wheat have stalled, have gotten under some key technical levels that are important to the market, and we need to see some rallying. For instance, May soybeans need to get back above $10. Right now they're at $9.92 3/4. If we can get back above $10 and close above it, that will be positive for the momentum of the market. If we get above 10.20 in the May beans, then you're getting back above the 50 and the 100-day moving average, and that will probably start attracting commodity funds again to start buying the market. Let's go on to the cotton. The cotton market right now is up about 35 on the day. It was 50 before the report came out. It's retreated, but it's holding at these levels. Over the last week, we mentioned cotton was down 300 points. We've gotten very cheap now again, where we thought the mills might start to show up again. And in fact, when we looked at the market at 6:30 today, cotton was up 81, and we think that was off mill buying. Looking at the cotton market, at what the news is, we've seen commodity fund liquidation, and that's caused this market to sell off as much as it sold off. Eventually, we will see the mill buying, which will hold the market, and we think we'll start rallying again. Looking at targets for the cotton, and then we're going to talk about some other things. The target for cotton, looking for the old crop to still get into the upper 60s. Let's just say 66 to 69. Right now we are at 60, 70 in the May. Looking for new crop to get up toward the 70 or in the low 70s, and right now December cotton is at 63. So these markets, we're looking at these levels to see the markets move higher. Let me give you the latest information based on where prices are right now, how it will affect cotton acreage in this country. We're not far from making decisions for planting. And the latest stuff I see here shows a reduction in China of 30 to 35% of cotton acreage. That's substantial. India, right now, analysts are talking about 10 to 20% reduction. So let's say a 15% reduction in acreage for India. In the United States, 15% seems to be the number, but we're hearing some people move that level up, maybe even talking about 18% cutback in acreage. This is really something that the market probably does not want to happen, because when things are tight like they are right now for U.S. style cotton, machine picked high quality cotton, you want to assure yourself that you're going to have adequate acres at harvest time next year. And with the market where it is right now, I don't think that farmers are going to be rushing to plant cotton. That's the reason we think these markets should move higher. There are two reasons cotton should move higher, December cotton. One is to attract enough acres or to keep from losing too many acres. The other reason is that you don't get the acres, so the market goes ahead and reacts to build a weather premium into it, which means higher prices. So we think over time the market will move higher. It's just a matter of when and why that might happen. Let me talk to you about one other thing, and that's the markets occasionally get overbought or oversold. What does that mean? Well, a market that gets overbought means it's gone up high enough and the amount of buying is so substantial that there's not a lot of new fresh buying that can come into that market. So in time, when a market gets to that point, it stalls out, you start seeing profit taking, and next thing you know, you see more profit taking, and you see either a top or a significant pullback. Flip that over, which is where we are right now in cotton. When you get low enough, you'll start seeing too much selling that's taking place, and then the market has a hard time continuing to sell off. You start seeing profit taking from shorts. That leads to more buying, and next thing you know, you've made a low. Well, one indicator that we look at to look at an overbought or oversold market is called a stochastic. It's an index of 0 to 100. When you get to 80, you're getting overbought. When you get to 90, you're really getting overbought. When you get down to 20, you're getting oversold. When you get down to 10, you're really getting oversold. You're getting closer to a major point where you could see a rally. As of the close yesterday, cotton, in May cotton had a stochastic of 5.3. I'll have to say that one again. It's 5.3. The last time when we were under 58, which was about a month and a half to 2 months ago, when May cotton was at 58, at that point, the stochastic was over 10. We are just a little over 5 right now, and the market is just above 60 cents. And overnight, we're starting to see mill buying. So we'll see what happens. But we think this could add up to a market that's about to start moving higher. So that's really it for today. I did not go into the breakdowns. They just shown up on the screen. Let's look at them real quick. The USDA was very slow getting the breakdowns up here. Looking first at cotton, 36,800 bales, up noticeably from the previous week. China took 20,300. We've got Taiwan taking 12,000, Thailand taking 7,700. The wheat market 445,200, and the China took 115,000 of that. Mexico took 112,300. Philippines took 98,000. Corn number was 418,000. That's down considerably from the previous week. South Korea took 281,000. Colombia took 136,000. And Mexico took 92,000. Now we'll go lastly to soybeans. Soybeans, 167,900. That's down 66% from the previous week, so that's a low number. China took 156,800. The Netherlands took 105,100. And Bangladesh took 54,300. Let's look for cancellations. Yes, cancellations of 263,700. They say that's from unknown destinations, but that's probably from China. as we're starting to see a switch from U.S. soybeans to South American to Brazilian soybeans. So that really concludes our meetings for today. I apologize the USDA numbers were coming up so late on the breakdown, but we appreciate you joining us. Hope you'll be with us again next week for our E3 Live Market Report. Thank you.